Hey there, this is Walker of WalkerX.com. I want to talk to you a little bit about the supercharged ETFs. One ETF I was looking at for a while was FAZ. There's other ETFs out there. Just want to let people know these ETFs, you got to be very, very careful with them. They have I don't know exactly why, but they have a natural built-in degradation in them. And for that reason, if the regular stock market goes sideways, or let's say if banks, let's talk about FAZ, F-A-Z. If the banking sector on average goes sideways, FAZ, which is supposed to go the opposite direction of stocks, so if stocks go down, FAZ is supposed to go up. FAZ actually would decline. If you look at a long-term chart of FAZ, it actually would decline instead of remain even. If the banking sector goes down over, say, a 6-month period. If the banking sector goes down over 6 months, like down and up, then down, up a little bit, down more. If the banking sector goes down on a sliding scale over 6 months, you're going to find that FAZ, as well as other ETFs, will go sideways over that 6 months, with peaks in between. So inverse ETFs are not good at all, especially like the 2-time, 3-time inverse ETFs, like FAZ is a 3-time inverse ETF. They're not good at all as a long-term investment because they have the natural decline built into them, natural degradation. If you're going to use something like FAZ, it should only be used on when you know that, for FAZ, for instance, if you know if you believe firmly the banks are going to go down in value over the next couple months, then you would use FAZ, you would buy in at a certain price, and you would try to sell out at just below certain peaks that you see happening. Buying and holding is just a very bad idea. Just look at a long-term chart of FAZ or other ETFs, exchange-traded funds, and you'll see that they're just not to be used for long-term holding. You can do some swing trading with them when the time is right. Of course, not if there's a rally in banks, which there was in the last 3 months, then FAZ goes to hell in a handbasket fast, which it did. So you definitely don't want to be playing with FAZ when you have rally in banks. But if you have the falling in banks that you perceive is going to happen for 2 months, then you can get in and out of FAZ through a swing trading type of situation. Some people like to day trade it, but I've never been much of a day trader. So just wanted to kind of give you that heads up on inverse ETFs. I guess the other ETFs might be similar. You could pull up regular charts at Yahoo Charts to see what I mean. Pull up longer term. If you want to see a longer term chart of what FAZ would look like, because FAZ is actually newer than some that have been around 2 years or more, look at SKF. SKF basically moves exactly like FAZ, except SKF is a 2-time inverse of the bank sector, whereas FAZ is a 3 times inverse. But if you want to see what a longer-term chart looks like, look at SKF and you'll get an idea of what I mean by that. All right, good luck out there, folks, and talk to you later. WalkerX, this is Walker.